So this week on PwC's Tax Reform Readiness series, we focused on base erosion and anti-abuse tax, or BEAT. And team, as you're thinking about the BEAT provisions and how to deal with them, what are some key takeaways that you've got for folks to be considering?
Ken, I think one of the key takeaways is that as you're doing the modeling for how the BEAT may affect your business exposure, the BEAT itself is not a tax provision that is new solely by itself. Obviously, there are other rules that have come into effect. I think one of the things that taxpayers need to pay attention to is sort of the use of foreign tax credits. How does that impact the BEAT? The use of NOL deductions, and how does that affect the BEAT? The fact that you might have a GILTI inclusion that may also then be includable in your modified taxable income, and you don't have the benefit of all the foreign tax credits, how that might expose you to the BEAT. And doing those modeling provisions very carefully in light of other provisions will produce, I think, potentially some interesting effects. But having a good understanding of that will help you as you move down the road to planning and thinking about how you mitigate exposure.
Tom, thoughts?
Yeah, thanks. Certainly the modeling's important because that lets you know whether or not you're in the middle of the road when it comes to the BEAT provisions themselves. And then you have to make a choice. I mean, once you've done all the work around modeling, you need to decide, am I going to do something about it? And that's, I think, where companies have a really tough choice. And that's because the deck has been stacked against us to some extent. I think that when you look at the broad anti-abuse provisions that accompany these rules, it's going to make it very difficult, I think, for taxpayers to go out and make a change in their business model or recharacterize some of their income, unless it's really the way they do business.
Paige?
What I would say is you really have to understand your operating models. You have to understand all of your flows. You have to understand the policies around those, and really you have to understand the characterization of the payments, because that's the only way that you're going to evaluate what your opportunities are, as Tom was mentioning. And I would echo what Quinn said earlier, which is that the results under BEAT can vary by your industry and many other factors, and are not intuitive in many cases because of the individual attributes and how those play out. So you really do need to work through it in a very specific way.
Great insights, team. For those of you who didn't tune into this week's webcast, please watch the replay. You can get more details from this team on how the BEAT works.